Today seems like a good day to go over a lot of our narratives with the Trump administration finally putting on the long awaited tariffs, basically on the whole world. So I'm not going to talk about the tariffs per se because I don't think anyone in the world knows how this is going to work out. I don't think there is, other than one time with Smoot-Hawley, that we've actually seen tariffs of this nature put on anywhere in the world. So, like you, I'm all staying tuned to see what's going to happen. But we have made a lot of different takes on what's going on, and I want to go over some of the takes to see if they're still valid or we need to look at something different. So today, if you look at our 10-year bond, it's down to 4.04%. The way I'm reading this is that the narrative of the market now, not of mine, is that this is going to send us into recession, which may or may not happen. I'm not really sure. Here's the issue with this, though. I mean, if you look at our inflation, and again, this is the PCE, which is Sans Food and Energy and Housing. Of course, that's what we all spend our money on, but this is the only one where I could have the government give me a long-term chart. And as everyone knows, I began my career all the way over to the left there and lived through those inflationary times. And someone mentioned that I was positive on fixed assets versus paper assets about 2 years ago when inflation started taking off. And I mentioned that, I think that gold and silver are going to be moving up. Doesn't mean the stocks weren't going to move up, but gold and silver was. And I think gold's up about $1,000 since that happened. But when you look at this chart, and everyone who watches this channel, you know that I believe we are just finishing the first wave of the 3 waves of inflation that we're going to have over the next couple years. Whether the tariffs make that worse or better, I have no idea. I don't look at that. I look at the fact that we have a $7 trillion Fed balance sheet, which was $9 trillion, and that we have not worked that out at all. And so the inflationary pressures are still here, and I believe are going to come back. So when you look at the bond at 404, and with our inflation rate, I think it's 3.4, okay, not the PCE, which is 2.8, but at 3.4, remember how you do this is the 10-year bond. So the 10-year bond gets a half point for inflation risk, and then you get 1 point for term risk. And term risk is the 10 years. So that's 1.5. Pick your inflation rate, 2.8, 3.2, 3.4, I think it's 3.4. That means that the 10-year bond should be trading at 4.9. It's trading at 404, okay? Now remember something, markets are anticipatory, and they're anticipating that these tariffs are going to slow everything down. And we're seeing this reflected in crude prices. This today, we're down 7.5%, but also, the Saudis are increasing production. So I don't know how this is all going to work out. But again, I'm looking at this as temporary, in my opinion. That's all I'm saying. Another thing that we talked about was that there's only 4 places where major, and when I mean major, huge asset managers can invest their money, okay? They can invest it in Europe, they can invest it in America, they can invest it in Japan, they can invest it in China, and China is problematic. We all know that. They have a closed system. It's not easy to access. You can go into Hong Kong and buy the Hong Kong shares, the H shares I think they're called. But basically, it's hard to allocate a lot of money into China. So we're saying, given the paper that Stefan Moran wrote and what Besant's been saying, that the Trump administration has several things they're trying to do. One, They want to drive down the price of oil, which is going down. They want to drive down the 10-year yield, that was 480 when they came in. Now it's 404, okay, which is good. And they wanted to put tariffs on everybody. So far, they've been kind of following their plan. The next part of the plan is to start negotiations. And I thought it was very interesting that most of the administration officials coming out were like, hey, do not retaliate, because then we're going to retaliate against you. Look at this as the high water mark, and just move on and do what we want you to do. Is that going to happen? I don't know. We're going to find out. People have been asking me over the last couple of weeks. I felt that, one, Trump was going to put on these tariffs. And again, I'm pinning the video. You can see where I said this a month ago, 6 weeks ago, that this is exactly what they were going to do. And it's always been, to me, how are the countries going to react? That's what we got to find out, all right? So as that happens, then we're going to know what's going to happen here. So let's kind of take a look at the currencies now, given that we're starting down this path. So again, remember, talk is talk, action is action. So this is the euro, and it's up today. My read on this is the Europeans, as you know, well, they have so many things going on. We could talk that for hours. They're certainly not settled. I look at this as a reaction of the asset managers. Where are you going to go? There's only so much you can put in China. So they're putting money into the euro, which is driving up the euro today, all right? But anybody who follows on my channel said that I believed that what was really going to happen was that the yen was going to go up. And as you can see, it is really going up here today. I believe it's now almost 145 right now, so it's up even higher. And again, I understand people look at the countries and say, what's going on there, how big they are. I don't look at that. You have to think about it in money flows. When asset managers are going to say, hey, the U.S. government is doing everything they can to drive down the value of the dollar, drive down the interest rates on their bonds, drive down the price of oil and gas, then where am I going to go? And we felt that the number one place that asset managers' money, just flows of money in the world, we're going to go was to Japan, okay? Safe, law-abiding, big economy. They've been working there for years, and I expect the Japanese yen to continue to go up, all right? So here's gold. This really comes from my first years in the business. In an inflationary environment, fixed assets do better than paper assets. And I'm going to do a video on that to talk about that. But as you can see, we sat around back there, and well, I guess it was somewhere around $2,000 that we really like gold. It's down $31 today, no big deal in my book. So we still like the metals, and we like food, and we do like energy, okay? So I know energy's down today. I'm just saying we still like energy. One of our narratives was that Intel, being the only foundry in America, that it would be taken over by a consortium. And as everyone knows, right now there's 3, probably 4 companies that are working with the U.S. government to take a piece of Intel, to take a piece of their foundries. They have a new president that they just brought in. I think he's been there like 2.5 weeks, but I like what he's saying. He knows what he's got, and he's not going to give it away for free. So I think Intel is still a play, especially with Taiwan now, what's going to happen there. The price actions we're seeing are based on this new narrative that we're heading for recession because of these tariffs, which could be totally valid. I just don't know, okay? But that doesn't get us away from inflation. That doesn't get us away from that we don't have a foundry. That doesn't get away from us that people still have to invest money. So I would say, we're at the beginning of this. Let's see what happens. Like and follow, and certainly tell me in the comments.